as a bonus mental model, what is one that you use that we haven't spoken about to evaluate investment opportunities, and how they helped you navigate uncertainty in like the markets?
Common sense, sadly lacking for investors. If you are speculating, understand that the process involves the answering of a series of unanswered questions. In order to do that, you need to apply common sense. Ask the company, what is the most important unanswered question? What you'll find when you ask that question is that 80% of the companies don't have an answer. Common sense means you stop talking to them. You don't waste your time. You throw that idea away. If the value creation mechanism isn't in place, if they are going to create value, it's going to be by accident, and you can't speculate in it. Following on from that, okay, they gave you a reasonable answer. Explain to me how you came upon that answer. That question, pardon me. Was it ground truthed? Was there data that told you that that was the right question? Or is that the question that the market was interested in? Is the question that you're asking yourself a sales tool, or does it actually unlock value? Again, common sense. How do you propose to answer the question? How do you propose to test the thesis? Will the question be answered by the proposal by which you propose to test the thesis? Is this the most efficient way to answer the question? This isn't rocket science. This is common sense. The question may be, we have a surface anomaly. We've pulled a bunch of surface samples. The surface samples were good. We trenched it to see whether the mineralization was transported in loose material or extended to bedrock. And we found that, in fact, the mineralization extended to bedrock. Now we need to put 5 holes into it to test the depth. That's answering an unanswered question. That's a good answer. But without this sort of even superficial due diligence into the value creation mechanism and the application of common sense, you will be diverted in speculation to the 80% of issuers that are either stupid or purely promotional. The final part of, I guess, this common sense is, let's say that the proposal to answer the unanswered question, you ask how much time it's going to take, right? Let's say that you think it's going to take 2 field seasons to mobilize the drill rigs to drill 5 holes. You're going to want to see the results of the first two holes before you drill the last 3. So you say to the guy, how much is it going to cost to answer these unanswered questions? The answer comes back, $5 million, and they can substantiate it. Okay, $5 million, and it's going to take 1.5 years. So it costs you guys $1.5 million a year in G&A to run the company. So to get me the answers to the unanswered questions is going to cost you 5 plus 1.5, $6.5 million. How much money do you have in the treasury? $2 million. Well, common sense says they don't have enough money to answer the unanswered question. Ergo, they're not going to be able to answer it. So you say to the guy, listen, you're short $4.5 million. Where are you going to get the money? How much are you going to have to dilute? Who is going to give you the money specifically? Because if I don't have some confidence that you're going to have $4.5 million to answer the unanswered question, you aren't going to answer the unanswered question. And the value that you've told me you're going to cause to occur isn't going to be caused to occur. This isn't rocket science. This is common sense and a little bit of hard work.